today's video, I will be answering a very important question. Is the housing real estate market slowing down right now, and what you can do to take advantage of this market? Stay till the end of this video to find out cool tips and tricks that you can use right now to act and take advantage of this interesting transitioning period that is happening in the market right now. So let's get right to it. So today is April 22nd, it's the day I'm shooting this video, and I like to give rates before I get started on each video that I do on a weekly basis because rates have been changing consistently. So if you were buying a $1 million property today and you were going to lock your rate and you had a credit score of 720 and you put 20% down, today's average rate is 5.625. Ouch. That's almost 2.5% higher than where the rates were last year at the same time. So to answer the main question for today's video, is the housing real estate market experiencing a slowdown? And the answer to that question is yes. And the main reason for that is interest rates going up. Now, market slowing down is an ambiguous term. It can have multiple meanings. So my goal today is to provide you clarity and tell you exactly what is happening out there, boots on the ground, and how this applies to you as a buyer. So let's get right to the board. So there are four main things that are happening. I'm going to go down the board real quick. So number one is longer days on market. Because the interest rates have gone up and a lot of buyers have either been priced out, or some buyers are just indecisive, or some have just jumped on the bandwagon of market crash. And I'll get into that in a second. But what that's caused is it's caused the demand to slow down a tad bit. And we're seeing in some areas of this country, not all areas, where some properties, depending on the type of property, depending on the market, depending on the pocket, that we're seeing days on market increase a little bit, where that was kind of unheard of the last almost 2 years. So that's definitely happening right now, which is caused by this market slowdown. Number two, you're seeing less offers coming in per property. So whereas a couple months ago when the rates were sitting at close to 3%, you were seeing 15, 16, 20 plus offers. Now you may see something around the ballpark of 3 to 5 offers, which is still a competitive in its own way, but it's not super competitive where you have absolutely no chance of getting your offer accepted. So definitely the competition has gone down a little bit. So like I just mentioned, these 2 points go hand in hand. Decreased competition overall, where just not enough offers. And then number four, in some areas, now it really depends where the house is and what type of property it is. We are seeing price decreases, which were pretty much non-existent the last 2 years. So some properties you are seeing price decreases happening. But I want to make this as tangible as possible. So don't misinterpret this as if the market values are dropping below market value. And market value is compared to what homes have sold in that area in the last 3 to 4 or 5 months. That's your market value. So homes are not selling below market value, but a lot of sellers that had placed their their homes at a certain value, and they just didn't sell due to this lower demand right now. So there was an example that I want to give. I was representing a buyer. They're looking for a beautiful townhome here in the East Bay area. It was listed for like $1,060,000. They got no offers. I called the listing agent. We had a good chat, and I asked her what's going on. It's been on the market for 15 days, and she said absolutely nothing. She had no idea what's going on. And obviously, we both understood it's the transitory period that we're in. The disclosures were all clean, almost a brand new townhome, and that seller had to decrease their purchase price by about $20K, and within 3 days they went into contract. So these types of things are happening right now in the market. So I want to be really clear where there's no misinterpretation of like values dropping, 100K below market, 50K below market. That is definitely not happening. If you are getting value out of this video, please share, like, comment, and subscribe to my channel to show me some love, because I love making this content for you. And my goal here is to provide you clarity and tangible solutions that you can use right now. Thank you for watching. Like, as I mentioned earlier, this is the housing slowdown that we're seeing in this recently in this last month or last 3 weeks has been caused by the rates going up. And a lot of people are undecisive, sitting in the back seat. A lot of people are just priced out, plain and simple. It's very unfortunate that that's happening, especially here in a lot of areas in California. And then there's some people that are jumping on this market crash bandwagon. But be really careful of what you're reading and what kind of content you're consuming. And right now, because it's this transitory time, there's a lot of different types of content out there, even from, like, you'll read an article from Bloomberg and you'll read something from Bank of America, and both of those are supposed to be credible sources, but sometimes they're saying different things. So read data carefully and understand what vantage point they're speaking from before you just consume and believe that content, and try to understand if that really applies to you. Now, a lot of experts that are in the industry, that have been in the real estate industry for many years, are not predicting a market crash where the prices go down like we saw in 08. There may be some price slowdown that we're just experiencing right now, but not a market crash of the 08 that we saw, a decade or more ago. Now, more info on this, click the I button and watch my video on should you wait or buy now. And there's information on market crash and what some of the economists are saying. So check that video out. But for today's video, if you are in a place where you can buy a house and you've talked to your loan officer and the numbers work for you, and you don't want to throw thousands of dollars in the garbage paying rent, and it makes sense for you to buy right now, then I want to share some tips with you. But if you are looking for a short-term investment or looking to buy something and flip it, and you're in this area of East Bay or in California or some markets that are similar to the East Bay, this is not the time for you to buy. But if you're looking to buy a property to live in and grow and make memories with your family, and you were priced out or you just couldn't make it happen in the last 6 months or 1 year, let's get on the board and see why you should stay in the market and stick to the plan and stick with your agent and go for it. So, to take advantage of this market, definitely what you're going to start to see here is, and you've already probably starting to see here, and now I don't have actual data for you right now because this transition is just happening, very recent, with the interest rates going up and everybody adjusting to the market, but you're going to start to see more homes hit the market, right? So more options for you, and you might be able to find a home in a city that you were not finding homes that were suiting your needs. So you're going to definitely see more inventory coming on the market. Number two, you will have an opportunity in this market of price negotiation. Remember when COVID happened and it had just happened, and then there was like 3-4 months of like market just completely slowed down and homes were on the market for a long time? Well, it's kind of similar to that, because the rates have now gone up, so we're adjusting to this new change. So you will have opportunity to do some price negotiations. Now, some of you might be thinking, well, rates are at 5.5%. What if I get this thing, my payment's high? Well, if your payment's high and you can't afford it, it's something you have to ask yourself. But it's an opportunity right now for you to negotiate and get a deal which was non-existent or close to non-existent 6 months ago. Now, this is a really good tip that I'm going to give you, and you can also check out our video on this, which describes ARMs, adjustable rate mortgages. But you can utilize products like a 5-1 ARM, 7-1 ARM, a 10-1 ARM that give you interest rates that can be almost 0.5 point or 1% lower than an average 30-year fix, which I just quoted you guys in the beginning of the video. Now, you're getting this information directly from a mortgage broker, okay? So my goal here on this channel is to give you the correct information. I'm not going to steer you away, but you should definitely talk to some credit unions right now, or even some large banks that are portfolio lending their own money. They may have some interesting products right now in this interesting time that may be very, very competitive compared to the average 30-year fixed. Now, these products are fixed for that much time. I'm not going to go in this detail. They're fixed for 7 years or 5 years, 10 years, and you could take advantage of that. Take advantage of this interesting time, find yourself a property, and you can always refi because none of these loans have prepayment penalty if you were to refi into a 30-year mortgage. Get out there and take some action. And like I mentioned earlier, make sure you're understanding what platform you're reading articles on and looking into the data and see how that applies to you. I hope this video was insightful to you. Please don't forget to subscribe to our channel, like, and comment because I love to hear from you and I love creating this content for you. Now, I don't know which side it's on, but either on this side or this side, you'll see some videos that are that you should definitely check out that talk about what's happening right now. And there's a video on adjustable rate mortgages that will explain how this product works so you can take advantage of it and take advantage of this interesting transitory time. Until next time, this is Karan saying with Optimal Loans.